Good morning, good afternoon, everyone. This is Omar from African Banker Magazine. I'm delighted to have with me today Dr. Terence Sibiya, who's a Group Managing Executive at Nedbank for all of the Africas, and Jouk Pleiter, who's the CEO and co-founder of Backbase. If you don't know them, well, you will be able to read about them in a report that we recently published, that we sent to many of the banks and that you'll be able to download from our website. It's called the African Digital Banking Transformation Report 2020, Building a Digital First Bank. So Backbase are the company to go to in terms of digital transformation, both at the front and back end of things. And of course, everyone who knows anything about Africa will know Nedbank and their dominance of the banking sector across the continent and in South Africa, where their headquarters are. So today's conversation will be really about innovation and how do we create that innovative culture, given that digitization is a reality. And things, if there's one certainty in this world, it's that things are evolving at an ever faster rate. So unless you keep up, you won't be able to be around for long. So we also know that banking in Africa is extremely important to the continent in terms of financing growth, and it's also a very interesting and profitable sector to be in. I believe that by 2022 we're looking at a sector that will have $130 billion or so of revenues. We're looking at bank accounts increasing from about 300 million today to 450 million by 2022, which is really in 2 years' time. And also for all those telcos, fintechs, and banks out there, people are anticipating $3 trillion that is, in digital transactions through mobile money and other digital channels within that time frame as well. So what really, and I'll get some of the report conclusions, but really my first question as a business owner, and I wanted to find out from both Terence and Jouk, is because everyone talks about innovation, and Terence, I know that you've got a very scientific background, having done a PhD in systems and computing. So when we talk about innovation and R&D and creating a sort of an innovative culture, obviously there must be a science. You don't just throw money at it and tell people, go and create something. Give me an innovation. So there must be a science behind it. So I wanted to find out how you create an innovation culture, or how do you oversee a R&D department within a bank, and also within a digital company such as or digital consultancy, should I say, such as yours, Jouk. So maybe we'll start with Terence. I mean, how do you create that innovative culture, and how do you go about it in a scientific manner?
Thanks, and that's a very good question as to how do you actually create innovation. But from the premise that we all know, and I'll start with that first, they always say nature is the mother of all invention. And this time around, this year, nature through COVID-19 threw a huge curveball at all of us. And as I was saying to certainly my colleagues at Nedbank and across the continent, my biggest hire this year as Chief Digital Officer was COVID-19. Because it really accelerated all our digital innovation. It really forced us to really listen to the customers and the changing behavior of the customers. First of all, driven by the changing reality of social distancing and a new dispensation under strict health regulations. So we had to adapt. And so while we might have a big R&D division that in a lab or digital or innovation hub or lab within the banking structures, those could have never, ever competed with what nature has enforced upon us to really think and innovate around. So the changing nature of a customer who now is almost completely digital savvy, and you've mentioned on the African continent, average age is less than 25 years old. And so digital savviness is quite high. And so most people, it's comfortable now to transact and do basic payments, receive money, use certain value-added services through their mobile devices, be they iPads or iPhones or any other tablet that you might hold in your hand or on your desktop. So in terms of fostering a digital culture within the bank, for us, it's really been understanding the changing customer behavior and the changing customer needs that's forced and accelerated all the digital initiatives that we might have had, some of them sitting on the runway, but they really took off during this COVID-19 pandemic as it really gripped our continent.
Thank you, Terence. I mean, in the interview in this report that we published, you said something quite interesting. Actually, you said that from Nedbank's perspective, the digitization drive was customer-led, so it was driven by demand from clients, as opposed to the bank coming up with solutions and then giving it to clients. Can you explain that a little? Can you elaborate a little bit about what you mean by client-led?
Yeah, absolutely. Much like I've just mentioned, if you really know your customer, or if you really understand the customer and the life cycle of your product with a customer, it's easy to innovate around that. If you don't know the customer, then all you will end up doing is developing product that might not be relevant or might not be useful to the customer at all. So if you understand, we are a retail customer or a wholesale customer or a business in this case, if you understand when they need money, when they need to pay big suppliers, when they need to modify under the circumstance of COVID their own supply chains, it's easy then for you as a bank to enable your systems to enable their business. If you don't understand their business, then all you are doing is selling an account, which is pretty much a commoditized product for all banks, and yours will be no differentiator. So really listening to the customer, understanding what their needs are, will typically force you to innovate quickly because you have to respond to their changing needs.
So you, what's your take on it? How does one innovate? I mean, do you throw money at it, or how do you go about it?
Yeah, I think there's a few very fundamental rules, at least how we look at this at Backbase. One is make sure that once you have a team, that they are solving a real problem. So I think it all starts with the problem. It starts with where is friction, and then how do you apply technology and user insights and user experience design to kind of reimagine the goals of the end user, and then utilize digital technology to do preferably a 10 times better experience, right? I think if we look at examples like Netflix or Uber, they do stuff that we already done in the past, but they apply digital technology to do it 10 times better, removing friction, making it as simple as you push a button and you get transportation, you get out of the car, your payments are done, you don't have to do anything, right? So in my mind, that is user-centered, basically innovation. So we really make sure that we don't do innovation for the sake of technology or for whatever. So the vision of Backbase is that the world is moving to platforms, right? So you have platforms that will help you with finding something on the internet, booking a trip, getting transportation, getting food delivered at your home. Everything is kind of moving into these kind of digital platforms that are orchestrating value. And the view we have is that in the world, but also in Africa, more and more of our financial lives will be organized and conducted by platforms. So banks basically need to adopt a platform approach. And in that platform, it's all about how do you orchestrate the customer engagement layer. So all these different customer journeys, from how do you onboard new customers, how do you do cross and upsell, how do you help them to make progress in their life? So it's all about help me. How do you help the end customer, a family with children, a small business owner, a sole trader? How do you make sure that you become the preferred money app, either web or mobile? And to become the preferred money app, I think that's the larger battle. You run this on a platform, and then you also really have to focus on what are all the aspects that these people need in their life, and how do you apply digital technology to make it a 10 times better experience. So I think that kind of gives a little bit more focus towards innovation, like what are the problems you want to solve and what type of outcome are you looking for?
And from your experience, and you obviously operate across, I believe, all the continents of this world, so emerging markets in Asia and Africa, as well as established markets in Europe or North America. So when you're speaking to these bankers, would you say that innovation and change culture is inherent in a banker?
Well, in a respectful way, quite often it's not always the case. But I think what is really encouraging is that I think the vast majority of bankers all over the world, they know that digital is a reality. I think Terence is clearly alluding to it, how important it is now top of mind, that people now clearly also with COVID see that the world has to become more in a digital type of first model, where you still have employees and people in the call center, in the branch, and advisors that assist human beings, but it is clearly moving into a digital first type of model. So I think around the world, banking executives are convinced that this is the direction to go. I think there's more question marks about how to actually do it. So what is the right operating model? And what is the right cultural model? And that's where you still see a lot of friction, because there's the incumbent IT infrastructure, which is suboptimal. There's the incumbent culture. There's a lack of DNA. But there, at least there's the desire to go, and there's also a lot of ingredients. So it's all about now collaborating together. And I'm very curious to learn from Terence, how is he navigating through this? It's kind of finding the right formula, finding the right operating model. And the bank can do this on their own. You kind of do the full digital transformation yourself, or you can find an ecosystem of partners that can bring other ingredients to the mix, the technology ingredients, the digital ingredients, and then together you embark on the digital transformation journey.
So Terence, how are you going about it and at Nedbank?
And Jouk is quite right. The reality is, for banks, it's a massive transition, primarily because a lot of banks, particularly the bigger multinational banks or regional and multinational banks, recently, it's only not too long ago, since the Y2K era, if we can still remember that, where there was huge investment in what we now call legacy systems. And these were big investments in ERPs and large IT deployments, which in a sense were solving for bank stability. We're also solving for regulatory requirements to have bank stability, resilience, and robustness in the system. As time has emerged, as time has moved on, has evolved, it's difficult for banks to quickly snap out of the legacy system mentality and quickly traverse into new ways of working, more agile ways of working, and then quicker deployments, disregarding they're still trying to reap the return on investment on those legacy systems. So what Jouk is alluding to is correct. We are almost at a concurrent stage where we have to keep the big banking systems or legacy systems or core banking systems still running, because a lot of branches still run off the backbone of those legacy systems. A lot of reconciliations and payments still run through those systems, because they also talk to government the big government transversal systems, whether it's be tax authorities or regulatory authorities. They're still on that end. They have not modernized or digitized as fast as perhaps maybe banks even. But the reality is we have to move into an ecosystem, and moving to that ecosystem means we get into partnerships with small niche players that then come with the solutions that our clients require, be they in the payments, be they in settlements, be they reconciliations, as we slowly wean ourselves off the big core legacy systems, which, as you can imagine, as I mentioned, still largely dependent on how quickly even our own regulators can modernize on their side. And we know, for good reason, regulators don't switch systems very easy. Big government systems still exist. They are not as nimble as we'd like to be. So there's that reality for big banks, particularly because coming out of the global financial crisis, there was even more investment in those core banking systems after the financial crash of 2008, 2009. So we are seeing, in terms of building the ecosystems, we've recently launched an app during COVID, which was also responding to the reality of the day that we needed a super app, not just an app that just does payments, balance inquiries, but could now bring a mall to the palm of somebody's hands, bring a series of vendors, and those vendors can sell you anything from flat screen TV to, if you dare, a box of wine delivered to your house. So that is the direction that banks need to. Fortuitously, for banks, once they tap into the data that was generated by those core banking systems, the legacy systems, it is very useful, because that data, you already know a lot about the customer. So you know their spending needs. And so your platform, as you build your platform and you evolve your platform, it's easy to tailor make it to a particular customer set or customer section or segment, because you already have a lot of their data, which would have been generated over years by the core legacy systems and the backbone of the card, perhaps, so card systems and or your basic accounts and expenditure movement of cash.
So when you hear what Terence has just said, and there's two things that that I noted. One is on the regulatory side. So there's obviously, after the financial crisis, all the regulators said, okay, look, banks are systemically important to the economy. So they put very, some people say harsh, some people say much needed regulatory requirements in place. And these, in certain cases, or by what, if I interpreted this rightly, they can't actually hold back in terms of what a bank can do, and in terms of the systems that it, or at least the systems that it needs to have to adhere to this regulatory environment. Is this something that you've experienced elsewhere in terms of the regulatory constraint, should we say, and regulators also need to become a bit more nimble to be able to adapt?
I would say yes and no. I mean, let's see how to dissect it. I think on one end, I think there's a few elements with the regulatories kind of being maybe a little bit more open about considering public cloud deployments and data privacy, some of those aspects. But in essence, I if I can reply to Terence, what I hear him say is that, look, the bank, the core of the bank is our system of record. It's kind of the classic ERP system, the core banking system that have been implemented in the late 90s or early 2000s, and that is still kind of the reality in how we typically service customers in the branch. So what I see is happening is that with the regulators' full approval, is that it's about how do you decouple your systems of record, and that's your payment infrastructure, your card infrastructure, your core banking, debit and credit side. How do you kind of keep those systems in place? But then first, on top of that, how do you kind of implement an engagement layer? And, you know, that's not per se about Backbase, but I think in general, that's the formula for banking moving forward, because the customer interactions right now, they will be less in the branch, they will less be in the call center, they will be more like, you know, ordering an Uber or, you know, getting some food delivered at your home. So the majority of these customer interactions will go via a digital platform, right? So I think that's really important. You decouple your systems of record because you cannot replace them. They are really the core of the bank. But what is really important is that you expose them via APIs. And then on top of that, you really start to invest in your digital engagement layer, because with or without the regulator, that's the real battle. If you do not own that engagement layer, the bank becomes over time irrelevant, because the customer interactions, they won't come to your branch anymore, or to a lesser degree, and they will do their finances. So there's really this battle about who is becoming the preferred money app. And there will be multiple apps, but there's big tech, fintech, e-commerce. Everybody is fighting to kind of be the preferred app for something, right? So I think that's the larger battleground. So in my mind, the formula is quite simple. First, you decouple your systems of records, you open them up via APIs, and you start to invest in your engagement layer. And you really need to master that. And what is really beautiful, that engagement layer is by definition omni-channel. So it will empower your end customers, but it will also empower your employees. So the whole idea is that in that digital layer, you can fuse the customer and the employee experience in a single platform. Just like with Uber, the driver and the consumer both work with a smartphone, and they're both interacting with the same underlying platform. So that in itself is a major step to transform banks and to make them ready for the future, or basically future-proof them. You can keep your systems of record. You don't have to do open heart surgery, but you can really first kind of fight on that battle for that engagement layer. Then secondly, you can start to infuse fintechs for any sorts of capability and other industries. So you're not bound only to integrate with your systems of record, but you can also integrate new capabilities. And then over time, you have that optionality together with your regulator, maybe to decommission some of your systems of record and move it all, the full stack, to the cloud. But that can be a nice multi-year kind of transition, where I would say first master the experience layer and the engagement layer. The shop needs to be open digital, and then you can renovate some of these backend systems over time. I'm not sure if that resonates with you, Terence, but that's a
yes,
happening
absolutely. And just to add onto that, what you will see through the partnerships, be they fintechs, is the real convergence of telecommunication companies and banks that bring and enable the decoupling, at the same time assist in building the platform seamlessly for the customer, because the communication component of it is just as critical, and the platform upon which the telcos bring and the banking and the services of the bank are slowly converging. And it's no longer also just the big telcos, it's smaller niche players that provide specific services to the entire value chain of either telecommunications, fintech, or the handoffs through the APIs that need to be integrated as well.
Yeah, Terence, if I listen to it, also really sounds to a degree like, imagine you have a small business owner, right? So they need to do payroll, they need to do invoicing, they need to kind of collect money, they maybe have to have some insurance. So there's this whole set of capabilities that as a small business owner, there's the telco bills. So how do you kind of create an eco, or maybe slightly, let's say, super app, where it's not just about your account balance, but it's all about how do you help that sole trader or that small business owners to kind of run their business, and how do you make sure that all those different capabilities are, so it is kind of, you have the essentials of banking, but also you go, I would say, a little bit beyond banking to make sure that you truly help people to make progress in their financial life. And you can do this in the context of consumers, you can do it in the context of sole traders, small business owners, and then all the way into corporates. But it's kind of, initially, it's kind of how do you digitize your basic banking capabilities, but then also with your larger ecosystem of fintech and other providers, how do you kind of make sure you help people with helping to streamline a large part of their daily lives, and especially the part that is related to money.
Absolutely. And just to add one final point, and we're acutely aware, and in your description too, you're acutely aware, people don't necessarily need banks, but they need services that banks offer. Yeah, exactly.
Yeah, it was funny because again in the report there's James Mwangi of Equity Bank, and he said that his branches could become distribution and logistics centers, as well as obviously centers of excellence for those businesses that require a relationship manager. But for the large majority, really, everything will be done through a digital channel. But it's interesting that you said that you're bringing services to people's fingertips, ultimately creating a sort of a marketplace. But tell me, in terms of when you're looking at when you're designing these products and solutions, do you dissect the continent by market, or rather you operate as sort of a one bank model and then roll out a solution that you tailor to the different markets you operate in?
Yeah, so we've got to be acutely aware of what I call the 3 M's. So multi-currency, multi-jurisdictional, multi-regulatory environments. So we start with on that point alone. So as you develop, you must be acutely aware that across the continent there's 54 different regulators with varying levels of advancement in terms of enabling technological deployment or enabling whatever solution you're trying to land in that market. Thankfully, there is some more leniency and there's some more acknowledgement, particularly from the pressure of the population. The more savvy they become and the more transactional they become through telephony or through digital services, the regulators are more attuned to the changing marketplace. So when you innovate, you bear that in mind, but then also you are responding to a groundswell of demands upon which will be driven your innovation and innovative culture. So we don't look at the continent and treat it as one. For sure, we don't, because you also have multilinguistic as well. So there's multi-language issues. For instance, in our stable, we've got English, Portuguese, and then some of the local languages in South Africa, 11 alone, that we need to be cognizant of when we design and put our tech stacks together. So what we do aim to do though, and this is the trickier part, but every now and then we get it right, where we develop once but deploy multiple times. So a solution that might be in the initial instances tailored for Mozambique, but can easily be transported to other countries in the neighborhood or other countries where we might not necessarily need to build any new infrastructure, but rely on existing infrastructure or rely on partnerships that we might have locally.
And Jouk, what's your experience with banks that all operate in multiple jurisdictions and multiple countries?
Yeah, no, it's a great question. I think it's kind of very much what Terence said. Ideally, if we go back to the platform idea, you have one platform that can support multi-currency, multi-country, multilingual, multi-regulator type of thing, right? So in the end of the day, ideally what you would like, and this is what the Googles do and the Netflixes do, they kind of have a blueprint or a golden master, right? That has basically the commonality of what you need. So we see that happening a lot in Europe, in Asia, in Africa, pretty much everywhere. Where banks that operate in multiple countries, they kind of create, they carefully select one or two launching countries that can then also really act as the blueprint or the master copy. You go live there, but you're not just going to serve that market. You're basically implementing the first blueprint. And then from there, you can replicate that blueprint and make specific local optimizations on a country by country basis. But the common denominator is still kind of the blueprint, which you then manage and maintain and upgrade centrally. And that kind of gives you kind of a nice model where a lot of innovation can come to market instantly across multiple countries because you do it from a single platform instead of from multiple competing code bases.
Fantastic, thanks. We've got about 5 minutes left, so I wanted to look at the outlook for 2021. First thing I wanted to ask you, maybe we'll start with Terence. Are habits changing in the way people interact with financial institutions? And is this change permanent, or are they going to go back to how they used to do things?
I don't think we'll ever go back to what we now loosely call a pre-COVID world. I think COVID has introduced a fundamental shift, and we've noticed it from the banks, about human behavior. Naturally, as you can imagine, this virus, highly contagious, and has disrupted us in many ways. So we acknowledge that it came in as a health crisis, but then quickly morphed into an economic crisis, which has fundamentally changed the way the banks will be organized and how the banks are going to respond to customer needs. So people stopped going to branches, for instance. Now we do have to rationalize that. We have to look at those branches and see if in certain areas those branches are no longer needed. That's a reality, because we simply cannot afford to have that much traffic going through those branches if we're strict and comply to COVID-19 protocols and regulations, which I think are going to be with us for some time to come. So even as early as 2021, we have to reimagine our whole network and a whole fleet of branches, for instance, simply because we just acknowledge it's never going to be the same, because most of the services that the people are getting on the branches can now get on their mobile devices in the comfort of their own house and safely, without necessarily putting their health at risk. So I think just on that front alone, we acknowledge that we will never go back to business as usual or pre-COVID behavior. That's one. And then two, I think just very quickly, I can imagine that with the convergence that we've been discussing this afternoon of financial services converging around platforms, the behavior of and accessibility of those services has fundamentally changed. And so it will be for us now as to how we adapt to that change quickly enough to remain relevant and continue to serve our clients in the way and manner that they deserve.
And in an interview, you said that you adapted pretty well, and yeah, I mean, you even surprised yourselves in terms of the staff being able to work from home, etc. Is that going to fundamentally change the way you operate as a business in terms
Yes.
of? Go ahead, yeah.
Yeah, yes, it will. So, for instance, we've done some serious calculations and modeling, and even if we were to try and get people in, perhaps get people back to our main campus, we simply cannot accommodate them anymore, because we've reconfigured the campus to be COVID compliant, which means we can only really readmit back people up to about between 53 and 56% maximum at a campus and at our main campus in Johannesburg. So that in itself is a fundamental change, because we all of a sudden have excess space. But what's happened is that those that will continue to work from home, their capacity to has significantly improved. Data connection has evolved, stability of the networks and stability of the connectivity has improved. So that's been a plus. And so people may never come back. And there are certain functions within the bank that I believe will be permanently working remotely and never really have to go back to the main centers, branches, or office parks that we own around the continent.
Jouk, does this all sound very familiar in terms of you've seen this story elsewhere?
No, of course, and I think most of us realize, right? It's kind of COVID is a massive behavioral reset in many aspects, and I think it's an equal play field. It happened around the globe, so it's happening everywhere. What is interesting to see is that how are we going to change the mix? Because I think you will see more with a digital platform, self-directed customers, but at the same time, the human assist is not gone, right? So and that's kind of that is kind of a combination of so appointment setting. Having the business rules in place, when can the customer do everything fully automated online, self-directed, straight to processing, no human involvement at all, versus where is that human added value needed, right? And especially, for instance, in digital sales processes, for more complex products, or to add another element of trust. Although you can do it fully digital, it still would be very good to make sure that in the operating model, the human element is still there, and that's either face-to-face, or you can use online video meetings like this to incorporate it in the overall customer journey.
But it's also the back end in terms of it's from a banking perspective. So how the operational staff are interacting amongst themselves and accessing systems, etc., etc. No.
Well, I think all of that, kind of over time, and Terence, you can allude to it, but I think overall, a lot of this stuff actually is A, moving to the cloud, B, it is all orchestrated by a digital platform. And then I think the traditional systems, to my understanding, I see them shrinking more to smaller systems of record, where the actual engagement layer is kind of owning the logic. Like, how do you do the routing for someone to onboard? How do you do the cross and upsell? How do you make sure that the customer is truly protected from cybercrime and all these elements? More and more, these elements are in the digital platform. It's happening with travel platforms, with Google platforms, with Netflix platforms, and it will happen with banking platforms as well. So I think a lot of that actually will be fully automated and industrialized and available from a cloud-based consumption model. It is just impossible for a lot of banks to kind of reinvent all those elements themselves. Just in the next couple of years. So there's a faster way to kind of get those ingredients fully industrialized and up and running.
Okay, we've run out of time, but one question just to Terence, maybe in terms of the outlook for 2021. Are you expecting a bounce back, or sort of a V-shaped recovery, or it's going to be a tough time for especially for financial institutions as businesses struggle, some of the loans default, etc., etc.?
Yeah, so very quickly, I think it'll probably be a U-shaped recovery. A V, I doubt. So we are projecting that a slower recovery. We're seeing some green shoots as people stabilize their own financial pressures and their own financial behavior. We've seen some stability in the second and third quarter of this year in terms of non-performing loans, and therefore impairments. So that's encouraging, but it's going to take a while before the economies that we operate in fully recover back to 2019 levels. And we predict that that'll probably come back in 2022, 2023.
Okay, but the banks are in a good position to withstand any shocks from these impairments, NPLs, etc.
Yes, unlike the global financial crisis, which was caused by the banks predominantly, and it led to a liquidity crisis. This time around, the banks are well capitalized. Liquidity levels, when you look at the financial reporting, as we get into year-end reporting, we see that banks' balance sheets have much stronger liquidity than before. So I think it'll be just a matter of management of the impairment line and helping customers rehabilitate slowly. But I think the bank's balance sheet is stronger than before.
Excellent, fantastic. Thank you, Terence. Thank you, Jouk. Just a few conclusions from our report. It says that 96% of those who responded to our survey said that digital transformation was one of the 3 most important factors in their bank's growth strategy. 80% see fintechs and challenger banks as partners for growth, with just 8% deciding not to work with them. Banks need to adopt the digital-first thinking to remain relevant. And just 12% of African banks regard themselves as digital first right now, but 48% say they are transiting towards becoming one. And lastly, African banks need to invest in recruiting and training their own digital engineers. And it's true. I mean, there's such a massive demand for for engineers these days that banks need to be at the forefront of this recruitment as well to be able to handle their digital transformation. Thank you, Terence, once again. Thank you.